Hello everyone, this is Dina, guest market analyst from FPG. Today is 1st May, Thursday. So in today's video, I'll continue to update the markets and the market trend I observed recently. US GDP contracted in the first quarter due to the impact of Trump's tariffs. However, recently, US tech company earnings came out being very strong. So overnight, Microsoft and Meta reported strong earnings and leading to a jump in their share prices in after-hours trading, which lifted Nasdaq index futures market price. At the same time, because Donald Trump's administration reversed their policy stance on tariffs recently, which caused a rebound in both US dollar and the US stock markets, with signs of a de-escalation in the US-China trade war. The US dollar rebounded, which could pressure other currencies, and also overnight commodities including copper and crude oil sharply declined following China's weak manufacturing PMI and a contraction in the US economy in the first quarter. So we can see there's potentially the Australian dollar and the Canadian dollar would weaken against US dollar in the near term. So in the following video, I'm going to talk about the potential market trend of Nasdaq, Canadian dollar and Australian dollar against US dollar in the near term and long term trends. Let's get started. This first one, let's start with Nasdaq 100. So this is a daily charts. In the past, I've been talking about downtrend. Now it's a break through the downtrend line, and this upside momentum will likely continue and test the imminent resistance, which is 61.8% Fibonacci retracement. And also yesterday, the price jump actually is break through the 50-day moving average. So I think at this moment, Nasdaq would continue going up due to the strong earnings results from big tech companies. And the next pivotal resistance level could be around the high in March, which is about 20,000 US dollar. And the near term, the key support will be around 50% Fibonacci retracement. So the next one is US dollar against the Canadian dollar. In the long term, I'm using a weekly charts. So in the long term, it's possible US dollar will continue weaken against the Canadian dollar. See here is the triple top in the long term since 2015. However, in the medium term, now I draw a ascending trend line. Now the price is falling on this trend line, which could find a strong support, and also at this moment, see here is oversold for a while. If I change to daily chart, it's the same. Stochastic has entered oversold territory. So at this moment, I think the exchange rate could rebound from here and test the near-term resistance level will be around the 200-day moving average. And also, I'm going to use the indicator that I always use, which is the Fibonacci retracement, connect the low in 2021 to the high this year. So here we can see the 38.2% Fibonacci retracement, also confluent with this uptrend line support level, and again support is potential rebounding trend. Once it's break up this moving average, and the next potential target could be around 23.6% Fibonacci retracement. However, once it's break down below this long-term trend line, US dollar against the Canadian dollar would accelerate dropping. So the next one is Australian dollar against the US dollar. I'm also using a long-term downtrend line. So right now the pair is facing a trend line resistance, as well as this 50% Fibonacci retracement. So the price will be around 0.64. At the same time, its statistic shows it has been overbought. Will most likely this pair face retreating risks in near term. Support level could be around the 50-day moving average, as well as 38.2% Fibonacci retracement, and the price is about 0.63. So at this moment, uncertainties remain due to the global trade war and Trump's tariffs, and economic data from major economies indicate that there would be a slowdown in the economic growth. So if the US economy continue deteriorating, I would say US dollar and stock markets could in the long term still continue its downtrend. But as for this moment, the near-term trade could be a reversal.